Hello and welcome to the latest energy market update. Prices have been mixed during the week but overall have closed higher compared to last Friday. Let's have a look at the week's actions in some more detail. Brent prices closed range bound on Monday with little direction being provided to prices. Market participants are waiting for the release of a number of monthly reports, and they're also waiting to see if President Trump will decertify the nuclear deal with Iran before Sunday. Prices gained over $1 per barrel on Tuesday, following comments from Saudi Arabia that they will cut exports by 500,000 barrels per day in November. This comes at the same time that OPEC commented that the market is showing clear signs that the market is rebalancing after years of oversupply. OPEC also called upon shale producers to help efforts in reducing supply. Prices softened throughout Wednesday and Thursday's session. The weekly EIA report provided mixed signals to the market, whilst the API reported that US crude stockpiles had increased by 3.1 million barrels last week. Despite prices falling in the latter half of the week, Brent closed last night just over $56 per barrel, which was $0.61 per barrel higher than last Friday. Contracts were mixed on Monday. Prompt and near-term contracts posted gains thanks to a reduction in Norwegian supplies, whilst longer-dated contracts closed the session lower. A stronger pound relative to the euro helped dampen curve contracts, as Theresa May stated her commitment to her leadership role. In contrast to Monday's session, Tuesday saw prompt prices ease and longer-dated contracts rise. Prompt prices eased as withdrawals from storage increased and demand was forecast to be below the seasonal norm. Curve contracts took their direction from gains seen in oil. As wind generation increased midweek, demand from the power sector eased, which put downward pressure on prompt prices. However, all curve contracts rose day on day. The return of 2 Norwegian processing plants to production directed prompt prices lower on Thursday, but once again, all curve contracts posted daily gains. The pound tumbled against the euro as well as the US dollar as the EU chief negotiator concerned markets when he said that there had been no great step forward over the UK's exit from the EU. Last night, near-term contracts closed lower than last Friday. November 17 closed at 49.35 pence per therm, down 0.95 pence per therm, whereas winter 18 closed at 49.95 pence per therm, up 0.5 pence per therm. Prices on the curve on Monday were relatively flat, with little direction being provided. By Tuesday, most curve contracts found some support from the wider fuel complex. Prompt and near-term prices posted losses on Wednesday thanks to healthy wind generation, whilst curve contracts took their upward direction from rising coal and oil. Near-term contracts lost value on Thursday, with November 17 losing £0.65 per megawatt hour day on day. However, curve contracts closed flat, with winter 18 moving only £0.05 per megawatt hour. Compared to last Friday, all curve contracts from December 17 onwards rose between 0.2 and 0.95 per megawatt hour. You can download this report from our website. Thank you for watching and we'll see you next week.